Good morning and welcome to another edition of the OFX Currency Couch. Having slipped below that 76-cent handle last week, the Australian dollar did find some support into the close on Friday, jumping back above that handle and touching levels around that 76.40 mark. That support really came on the back of some weakness in the US dollar rather than any underlying strength for our own currency, and that came after the Fed's minutes earlier in the week and a suggestion that the FOMC is divided in its opinions on the causes and effects of inflationary pressures. Inflation remains subdued, and that leads us into this week and a key PCE index, which is of course the Fed's preferred measure of inflation, which is due Thursday in the US. A soft read there could certainly undermine that divide within the Fed and suggest that we may not see the 2 to 3 rate hikes initially expected within the market next year. If that's the case, then there is some support for the Australian dollar and perhaps a move above this resistance level at 76.30 at the moment. Our domestic attentions turn to our own private capex expenditures as well. An improvement here could support improvements across wider business conditions that we've seen lately, which will hopefully flow into labour market improvements and those underlying core macroeconomic data sets in GDP, wage growth and inflation. To be honest though, we don't expect this to have a huge impact on the broader value of the Australian dollar. An interesting side note, the pound touched 6-month highs against the Australian dollar last week, and we expect continued support on a monetary policy basis alone. Of course, Brexit remains an overhanging cloud for the British pound, but as long as the Bank of England leaves a rate hike on the table to counter transitory inflation pressures, then there is further upside support for the pound. Any further context, please call our dealing teams.